Welcome back, everyone, to June 16th live webinar on our financial markets overview for this week. As always, I'm Michael LeBlanc, Director and Senior Portfolio Manager for Canaccord Genuity Wealth Management, and thank you everyone for attending. Today we're going to have a little bit of a shorter session, hopefully shorter session. I'm going to try to go through it, not because we're trying to cut anything off, but tomorrow, if you haven't seen, we do have our chief US strategist doing a live webinar tomorrow morning as well. I believe it's 9 a.m. You can reach out to us for the link if you haven't received it. We can certainly resend it to you. So he's going to go into more depth to a lot of this stuff. So I'm going to touch on what's going on and what we've seen, but we'll defer some things for him tomorrow. Anyway, hopefully everyone's doing well. As always, the information here is for consumption purposes only, not to be taken as advice. Always talk to your advisor before initiating any strategy or using any investment ideas. And the information we provide is up to date as we possibly can. And if you're watching this on a replay, do check the date. It is June 16th, 2020. As always, your cameras and microphones are muted, so don't worry about any background noise. But we do welcome questions and certainly feedback. We've been getting a lot of feedback on ideas that people want to see on the deep dives that we do every Friday on our YouTube channel. Even Tony Dwyer coming to do a talk to get kind of his much more US-centric perspective. And we just put out we're just putting out, a video with a guest speaker from our UK office who's a specialist on pensions and talking about what the new reality of retirement looks like in today's day and age, not just COVID, but just how things have changed from 10, 20 years ago as far as retirement goes. And it's worth a quick watch. It should be posted up in the next day or so on the YouTube channel. So I recommend you go out there and watch that. But as always, if you do have a question, click on that Q&A button. You can type it into us or email to us after. And especially if you're watching the replay, send in your questions. So let's dive right in. So what are we looking at as far as the economy and COVID goes? Well, what we're watching for and what we're starting to see right now is the manufacturing numbers come out of the US and Canada. They are slower than expected by about 8%. I think we were expecting a 20% downturn. It's about a 28% downturn. So a little bit of the reality setting in when it comes to what the shutdown really meant. And then on the COVID front, we're going to dive a little bit more into all these in a moment, but the privacy bill around the coronavirus tracking systems has hit a roadblock in Congress and the Senate. Como in New York is threatening to bring back some of the restrictions as people are maybe getting a little bit more aggressive about the going back to normal than they're comfortable with, given the numbers in the US have not slowed down. Beijing's had another big outbreak, and they've got some new closures in place, which of course is sparking some fear of a resurgence or a second wave. We'll talk about that as far as the market performance goes. Global tax stocks are wavering as the governments are, looking at how hard and how much they have been spending as far as the stimulus packages go. Automakers reopening has slowed a little bit as workers are off. Of course, as more people went back to work in the close quarters, we've seen more outbreaks. A good example of that is Tesla, although I don't think Tesla will be alone in that, just simply that Tesla was the first to open. If you remember, they opened a week early ahead of regulation, and they're seeing some outbreaks in their employees. And as far as those outbreaks, I was talking with a couple of specialists in the recent weeks. We are watching those numbers, of course, and we're going to go through them here. And we are expecting, of course, some more infections, some more cases as we return back to reopening the economy. We're still trying to keep that curve flattened or That's what the governments are trying to do and society's trying to do. But just by the nature of introducing people to become more in touch, whether it be at the restaurants or in the parks or anywhere, of course, we are going to see some more cases. We just don't want them to spike like we saw in some areas, like New York being a prime example. Anyway, let's keep going. Insights and analysis for this week. We're a month into reopening in the U.S. And we're seeing some, economic movement, getting a little bit more clarity. We're still seeing the numbers not slow down. They are through 118,000 deaths in the U.S. and averaging about 1,000 a day. So still not good. It hasn't spiked further. We are seeing a bit more surges in the cases or infection cases. But we are also seeing some pressure on the credibility of those numbers, with some U.S. government officials saying they want to slow testing because it's driving up the numbers. Of course, it's driving up the numbers the more tests you find. Seems pretty obvious there, but and also some push apparently on some of the states to not divulge all their numbers. So we're keeping an eye on it. It is staying steady, but keeping an eye to see if we're going to see any surges in any areas. The M&A, or the mergers and acquisitions, continue. Uber was slated to take over Grubhub, but they just lost in a bid-in transaction for a European rival to come in and just buy JustEatTakeaway.com. And this goes to, we talked about some other deals going through in the previous weeks. We're going to see a lot of that where some companies are just struggling too much, and it makes more sense to sell than to try to struggle through. So we'll see a lot of more mergers and acquisitions as, of course, we go through this. The U.S. Fed is talking about the long road ahead when it comes to the challenges. And of course, we've got a new Bank of Canada governor up here, and they're kind of walking into a kind of a perfect storm. We've got the coronavirus pandemic, and then of course we've got the oil price slumping, and all expectations on the oil is it might be a 2-year climb to get back to some normalcy there. Other things we've seen in the in Russia, Paul Whelan, a former U.S. Marine, is convicted of espionage and sentenced to 16-year prison. So a little bit more pressure on an already tense Russia-U.S. relationship. And we continue to see that with China as well, with the U.S. And a little bit with Canada when it comes to the extradition order for our local guest here. The coronavirus privacy bill, as I mentioned earlier, has hit roadblocks. So this is a privacy bill targeted around the coronavirus tracking software, surveillance tools. So this is the ability to say if someone's infected, they could track and say where were they, who was around them, and notify those individuals that they may have been exposed. It's been used successful in other jurisdictions. In the U.S., they were pushing a privacy bill to protect that information so that surveillance information couldn't be used for other sources. That's kind of being blocked by a couple of sources in the Senate. Not surprising, because this is a tool that they'll want to use in things like the protests that are going on right now. And we've already seen a lot of controversy around the facial surveillance that they've been using in the protest to track people down. So that's been tied up. So probably won't see that technology rolled out too soon in the U.S. As we mentioned in New York, as people return back to what they consider normal, maybe overstepping some of the bounds with new clusters of about 80 infected. Of course, the government in New York is concerned because they were one of the very hardest hit. So they're taking extra cautions to shut further things down in that area. Beijing, of course, we've seen that some military-style shutdowns as they've had another big cluster there as well. So all those are raising concerns around a second wave of the virus infections. Some good news out of China. We are seeing a bit more push in some of the consumer spending. Now, this goes after what we're seeing in the US is a little bit of that pent-up demand, as we talked about before, a surgence of spending when things first opened. We saw that in China, and then it slowed down. Well, things are starting to pick up again. So that's a good sign that after a potential short period of slowdown, the economy can start to move again. Now, this is just early signs with some big ticket purchases around houses and auto sales, but we'll keep a track on how they progress along there. The Eurozone saw their trade record fall, or sorry, the trade saw a record fall in April. Again, this is just those numbers that we knew were going to be there. April was the shutdown between all the countries, so nothing was moving between borders in the Eurozone. Of course, Italy and Spain completely closed. So not a big surprise on that front, but we're just getting those April numbers now. As far as the protest goes, of course, it continues on. Luckily, we've seen a bit drop in the violence, but certainly the numbers have not diminished. And we saw another Atlanta incident with the police killing a Black individual at a Wendy's parking lot, and that's just more fuel to the fire for the issue. So this will continue, and hopefully we'll see some change, and we'll see some government response as the protests continue. One area in the market is the utilities, which we've talked about in the past, have been stable. They've been a bit more volatile than expected, not on the revenue front, just simply on their stock prices. Dividends has still been strong on the utility side of things, not the energy side of things, but on the utility side of things. So not a lot of concern there. We've just seen a little bit more volatility than we usually would expect in that category. And that's probably just cash moving around with the volatility that we've seen in the markets. So just a quick view of the numbers. As I mentioned, the US is just over the 118,000 and almost, or just coming up on 2.2 million total infected. The world's over 8 million total infected, and just shy of the 440,000 number on the deaths. So not a real slowdown, especially in the US. And we continue to see soft numbers out of Russia and other areas around the world where we're not sure we're getting the exact totals. Canada, we're just coming up on 100,000 total cases and almost 8,200 on the deaths. So where are we at in the markets? Well, the stocks rallied for most of last week. We saw quite a bit of volatility as different numbers came out, and a lot of concern around a second wave. This morning, things started off very much on a downward trend and rebounded dramatically as we came out with some retail numbers better than expected. Although those retail numbers, as I mentioned, is that pent-up demand. I wouldn't buy too much into that. I'd be selling into this rally. Just because I think we'll probably see, much like we saw last week, a really big pullback day to offset today's growth. Up in the US, the retail numbers are expected. We've signed some early numbers, as I mentioned there. They're probably going to be better than expected after the big plummet we saw in April as things get back to normal. Manufacturing is also expected to jump as things start to reopen again. Although those numbers have come in a little bit lower than expected, at least the early numbers on the manufacturing, as things are slower to get up and running. And even, as I mentioned, with automotives, when they do, they're dealing with employee shortage as people were having pockets of outbreaks within the plants, and people having to take time off. So probably the manufacturing numbers are going to be a little bit slower than expected. The housing market index is expected to show things increasing in June from May, but again, increasing after a big drop. We are actually seeing more and more estimates of anywhere from a 15 to 25% decrease in housing prices for 2020. In the U.S., Amazon's Jeff Bezos has said he's willing to talk to Congress about investigations into antitrust laws by big tech companies. BlackRock investment firm is injecting about 18 million into European companies. Again, more mergers and acquisitions, shoring up companies and taking ownership positions in order to help the recovery and expand their equity exposure over there. BP wiped off their balance sheet almost 18 billion or 17.5 billion. That's as they write down their expected returns for this year. And that's just in the energy sector with oil and gas, of course, with the demand still quite low and the supply still way past demand. They're having to shut down projects. U.S. companies the U.S. Government has opened up a little bit the ability for U.S. companies to work on the 5G rollout with Huawei. They had shut that down to the Chinese company Huawei completely, and they started to open a little bit for them to start working with them on the next generation of 5G. So we'll see how that progresses and how that might affect the U.S.-China trade negotiations. Tesla is still negotiating to move or open an assembly plant in Texas. This was part of their strategy in open California's plant a bit early. They were pushing the government there to give them basically rationale to say that California wasn't working with them, that they could move to Texas. Of course, Texas is offering a lot of tax incentives and more favorable environmental and land use there. So very likely we'll see that move, but they continue those negotiations to move the plant from California. In Canada, StatsCan's looking to release the foreign investment numbers. So this is how much Canada has invested outside of the country and how much foreigners have invested inside of Canada. We did see a big sell-off in Canada, about $10 billion through the shutdown. Probably that's going to continue as the flight to safety goes to the U.S., especially as the fear of the second wave continues to grow. In April, as I mentioned, the factory numbers have plummeted for April, and May is not likely to see a big improvement as things have been a little bit slow to open there. Canada's Trans-Canada Pipeline is restarting after the oil spill out in Abbotsford. If you didn't see that in the news, they had to shut down for a spill. We haven't heard, or at least at the time I was putting this together, I had not heard how big the spill was, but they are only closed for just over a day, so probably not that big, hopefully. And they've got the pipeline running again. And if you haven't heard this morning, Canada's extending the CERB for 8 more weeks. So that's the emergency response benefits that everyone's receiving is going to continue for another 8 weeks, as Justin Trudeau announced this morning that he's going to push for that. On the dollar front, as we talked about in previously, we're seeing the US dollar strengthen a bit. Not a surprise, that's on the fear of a new outbreak. The Canadian dollar was almost a cent higher last week. So we're seeing a little bit of slip there, and also tied a little bit to the oil price. But we'll probably see the US dollar continue a little bit stronger as we move into a potential second wave, and also as we see some of the economic numbers coming out, probably not as strong as some areas we're hoping. On the commodity front, we saw the oil slip down a little bit. Not too much, as most the supply has been cut to compensate for the lack of demand. We are seeing going into the futures into July dropping further to $34 a barrel. And that's probably on the lack of confidence that some of the countries in the agreement aren't going to keep their supply as low as promised. So we'll have to keep a close eye on that. But as I mentioned, all the experts are now coming in to basically say this is a 2 or 3 year recovery. Not likely to see a quick turnaround on the demand, as you know, the big users, as mentioned in the past, airlines, shipping, and just going through the excess surplus that we have right now. So also we've seen a big drop in the use of rigs. So this is the oil wells themselves are provided by rig companies, and with all the projects fallen down or being shut down, there's just no demand for them. So we'll likely see that continue for a while as well. So that's all we have for this week. As I mentioned, short and sweet. I know I blew through that really fast. As always, though, do send in questions. Do reach out. Things are actually looking much more optimistic. Don't feel bad about bad news if you hear it in the market. We do look for that going through this because we know it's there. We're just waiting for it to come out, and so that we can see exactly how it's going to affect things. We are seeing actually some positive numbers come through. Unemployment better than expected, still high. So we've got to work through that, but it was better than we were expected for May. Still in the mid double digits, but as things reopen, hopefully we'll see those numbers go down as well. So that's all for this week. Take care, everyone. As always, reach out if you have any questions. You can reach us at mikeonmoney.com if you would like to see more of these videos or to see all the replays. And we'll see you tomorrow or next week whenever we get a chance to talk to you next. Take care.